Thanks for joining us today. We are very excited. We've got a Lakeside Flex opportunity that we want to go over. This is really one of the bigger deals we've been able to find. It's fairly rare for us to find a deal that's in the kind of $20 million price range. We've only done 3, right, in 15 years. So when we do find one, it's very exciting for us. And this is something that fits right in our wheelhouse of what we are looking to do. And it's also 200,000 square feet, roughly $20 million. So it's a good-sized deal, which we're pretty excited to go through here.
$100 a foot. It's that includes the land, that includes the building. It's a great location. Speaking of location, over the last 10 years, we've done 5, 6 deals in this immediate area.
Yeah. So this deal is located in Tucker, Georgia, and North Lake was our 11th deal that we did. So we actually own the apartments across the street from this building that we bought about 10 years ago. At this point, we should have bought this 10 years ago too, but that didn't happen. So it's an area we're very familiar with. A lot of stuff has happened in this area, and we have been doing deals here really for the past 10 years.
Yeah, I mean, Embry is 2 miles to the east. Foxwood is 2 miles to the west. Pinewood is 2-3 miles north of here.
Yeah, so all right in this little bubble. Most of what we had here is apartments that we've bought over the years, and now we have. As we've been getting more and more into the flex stuff, north of Tucker is Doraville. We own a bunch of flex deals that are in the Doraville market. And we coming a little bit further south on 285 is where we find North Lake and Tucker here.
Right, and just north of Doraville, we have Norcross, which is the majority of our flex deals that we've had tremendous success in Doraville and Norcross with our lease-ups that we bought in the last 24 months. And, we're really gone from, quasi-occupied to full occupancy at full market rents.
Yeah, and the market here, directly across from this asset, they're tearing down. Our target has always been the lower rise. We're trying to find single-story buildings. It's about a 5 or 6 story building right across the street that they're tearing down and turning into apartments.
Yep, 400 units. It's
so that's big. That's a big development that's going in right next to where we're at. And other assets in the immediate area here have been redeveloped as well. We've got Emory, the healthcare here in Atlanta, that they took a huge portion of North Lake Mall and converted that into office space.
Yeah, it's like a whole Sears, 3-4 story Sears, and turned it into medical office billing and, back office support.
Yeah. So there's a lot happening in this immediate area that we're excited about being part of. We've been excited about it for many years, buying stuff here. So let's talk about just Lakeside as a whole. This is a 3-building asset. So it's part of a fairly large complex, and across those 3 buildings, we have 197,000 square feet that Josh, you mentioned we're buying for $100 a square foot. So we like these types of assets. We like the suburban locations. We like the single story and right off the highway. That's where really all of the stuff we're buying, that's Flex is. It's right off the highway. It's single story, lots of easy to get into, easy to get out of.
Yeah, and it's nice to go into a property that has good occupancy with long tenured tenants and some value add to still create.
Yeah, we want to see that value add. This is roughly 80% occupied, and that means we have a good amount of lease up that we can do to capture really current market rents that are there. So we're buying this at a 7.5 cap with only 80% occupancy. So if we're occupied, we then own it over a 10 cap. That's really the target that we're going for. That's where we have this value add, and all the additional occupancy we're looking to do is in this flex asset space, which is what this building was originally built for. It has roll-up doors on the backside. On the inside, there's been some office built out in these spaces, and we can keep as much as we want or customize as much as we need to for an incoming tenant.
Right, and we like that, that a couple of tenants use it for flexible use, like the City of Tucker or LabCorp that uses the roll-up doors. The City of Tucker, their facilities management is there. They're one of the largest tenants, as well as LabCorp, uses it as one of their distribution centers, and they're one of the, one of the top 3 largest tenants here as well.
Right, so yeah, if we go through like what our tenant base looks like, that's already here. Of that 80%, we've got a good mix of medical tenants, which you mentioned, LabCorp, that's there. We also have hospice care center that are there. And then we have really the government and facilities management of Tucker. And they take up, they're a large portion of it. They have 22,000 square feet. So roughly just 11% of the total space is City of Tucker and their facilities maintenance. Now, on top of that, about 50% has been converted to and being fully used as office. So they're not using the back roll-up doors. They're not using their warehouse space in those suites, and they're just rented as office. The benefit of that is it gets a higher rental rate. So our average rents here are $18.60 a square foot, and we have about 4-year average lease term on all the existing leases.
Yeah, and don't forget the annual escalations. You know, our average lease term is 4 years. City of Tucker is leased till 2031 with 3% escalations in there every year. Our average escalation rate is a little bit over is mid-2s. So as we hold the property, we have that stability of the tenant and the income growth as we continue.
Yeah, that's really the most exciting part is everything we've been trying to do is get these annual lease escalations. Right now, it's fairly common to be able to get 2.5%, 3%. We've gotten 4% on some of our flex stuff, which is great, but I don't think that's going to last forever. I mean, we talked about this some at the end of quarter last year. You know, rental rates were 1.5% escalations. So we're really trying to capture that higher rental rate escalations now, especially on all the lease up stuff that we do. So as we look out 5 years, we have very good escalations throughout that time frame.
Yeah, and so as Dave mentioned, the current occupancy being 80%, the most recent leases have all been signed in the $19 a square foot range, and that's really our projection for the upcoming space as well. Is really net is that we'll have about $19, and the average lease is right around $18.50 right now, depending with the blend of it. Yeah. So overall, it's a strong rent roll.
Yeah, and that's on the highest rents are like the medical stuff. Like LabCorp has higher rents in the office space that's there. If we rent it to Flex, we only need to get 12 to 14, which is the market, which is what we've leased all of our other Flex at. And in doing that, those leases typically have better pass-throughs to the tenants. So they're covering more of that interior cost, and there's not as much maintenance there's not a lot of interior maintenance to do on a warehouse.
Right. So in leaning it out as we go into looking at the cash flows and really our CapEx spend, we're basically budgeting to spend about just under $2 million. Of that $2 million, 1.3 of it is really the build outs to recapture the roll up doors and turn the property more into Flex.
Yeah, and we can kind of customize how we're spending that money. So we go in knowing, hey, we're going to have to spend $20 a square foot for the most intensive, best tenant build out that we would have to do. If we have to do anything less than that, we just save that money, and we're not spending it on the TI then. That's when we look at this deal. We mentioned it's like right at this $20 million range because we have a big chunk that's in this TI bucket. Now, we could go out and lease that space. Sometimes tenants will just take it as is. Other times they want to do more work with it. But we've planned that we're going to have to do work on the full square footage that's vacant.
Right. And the remaining of that spend, roughly about $700,000, is to basically update any mechanicals, parking lot, roofs, just kind of the general facelift to make sure the asset's in a good position to ride for the next 5 to 10 years.
Yeah, so to recap that, it's like $1.3 million that we can spend on improvements for new tenants.
And leasing.
And then $700,000 that we are spending on improving how it currently operates. So we want to take an asset. This one, most of the mechanical systems are around 10 years old. And as we upgrade those and improve them, one, they're more efficient, and two, they're easier to work on. So not that 10 years old is that old, but when you're talking about a rooftop AC unit that's been sitting out there in Georgia for 10 years, 12 years, that starts to add up on it, and they have heavier maintenance. So, but again, we like these single-story buildings. We like these types of assets because we can do the work on them very easily. We have a good vendor set. You don't have to be an engineer to go replace one of these rooftop units. They're fairly easy. It almost doesn't even matter how big they get. We've done up to 60, 70, 80-ton rooftop units where just like a 4-ton rooftop unit, it's easier to work on this style of a building. So overall, we have a good amount of CapEx to plan for how we're going to get this thing leased up. It's following exactly the plan that we have done with our other single-story flex buildings. So we feel like we're in good shape to execute, and we're really excited about buying this at a 7.5 cap with 20% vacant.
Right, and so as we close the property and we look really at the immediate, call it the initial 6-12 months, when we look to basically build out those new units, we're going into a cash flowing asset to begin with, and we'll have an interest only loan that will help us through the lease up period for the initial 18 months. From there, as we lease up the property, the cash flows improve from there.
Yeah. And we're expecting that we are leasing this within the first 12 months that we'll lease the remaining space. So at that point, we look at once we're 1 year out, we feel like we'll have everything leased. And typically those leases, it takes some time to do TI, or it takes a little bit of time if we have a rental concession before we have full rents. But that would then tie into that 18-month time frame where we believe we're fully occupied with full rents in place and owning it at over a 10 cap. So capital stack and return on this is, we're doing our standard. We got our 7% preferred return, splitting the upside 70% to the investors, 30% to the GP. And we expect to be able to get into that 8 to 10% cash on cash. Again, we're going to be paying debt after that 10 cap. So 8 to 10% cash on cash returns each year once we're stabilized. That's our goal. It's going to be pretty exciting to do. Finding an asset, one that's this size, is great. It's also perfect type of building we want to be buying right now. We've had the most success leasing this style asset over the past 2 years, really.
In the last 5-6 flex deals we've done have really blown our mind with how well, number one, how they're performing. Number two, how well the transition from current leases in, say, the $6 to $8 range, that we're able to turn those over and get $12 to $14. We're exceeding our expectations, though. So we're excited about taking another asset and building out space that is in very high demand right now.
Yeah, and most of those spaces we talk about too are in that sub 10,000 square foot range. Our best tenants that we're having the most velocity on are in that 5,000 square foot range, and there's big spreads between that. There's a big difference between 2,500 and 7,500 square feet, but those smaller tenants are really what our bread and butter has been, and where we've seen the most velocity in leasing. And this building, with the three of them, really set up perfect for those size tenants.
Absolutely, yeah.
Cool. All right, well, that's it for the Lakeside Flex deal. We are excited to be bringing this one out. Please let us know if you have any questions, and if there is anything else we can go through, we'd love to sit down and chat with you. Thanks. For more tips on operating and investing in real estate, please check us out at greenleafmanagement.com or find us on YouTube and Spotify.